This is Simon Thompson, Vice President and Wealth Advisor at Texas Legacy Wealth Management. Welcome to our monthly market update for June 2014. We're going to walk through the major market events of the month. Securities offered through LPL Financial, member FINRA SIPC, investment advice offered through Texas Legacy Wealth Management, a registered investment advisor and separate entity from LPL Financial. June came to a close with the S&P 500 closing near all-time highs. June also marked the end of the first half of 2014, which has been positive for stocks, with the S&P 500's total return at approximately 7% for the year. We saw data from all areas of the economy point to positive growth ahead. We continue to believe that the economy is seeing steady, albeit slow improvement. Evidence of this could be seen in the Fed's Beige Book release, a qualitative assessment of economic, business, and banking conditions across the United States. The Fed meeting ended with few surprises, as they continue to stay the course in tapering and made few changes to their post-meeting statement. Globally, the ECB, European Central Bank, took action in June to spur on economic activity in Europe. They did so by cutting 2 interbank interest rates and setting the overnight deposit facility rate below 0. By punishing banks that hold reserves, the ECB is not so subtly encouraging those banks to lend. Politically, we saw a big surprise when Majority Leader Eric Cantor lost his Virginia primary. While this has little immediate impact on the economy or market, it could lead to uncertainty with midterm elections looming in the fall. We saw conflict emerge once again in the Middle East with tensions flaring up in Iraq. While we continue to keep a close eye on any geopolitical conflict, there has been little impact on the U.S. stock market, although we have seen energy prices increase. We believe that if we were to see energy prices spike for a prolonged period of time, we could see a more substantial impact on the global economy and markets. The second quarter's positive close continues the bullish theme we've seen, as the S&P 500 had positive returns in 9 of the last 10 months, and we've seen 6 positive quarters in a row. With that type of a move and positive trend, the questions of whether or not we're due for a correction become inevitable. While a pullback would not surprise us, we believe it could present an opportunity to buy on the dip, as we don't see a recession emerging at this time. In our opinion, the positive returns we've seen year to date also present a great opportunity to review portfolios' overall asset allocation and rebalance in cases where it's needed. Bonds were little moved during the month of June, with 10-year Treasury yield beginning the month at 2.48% and closing slightly higher at 2.53%. For the year, the Barclays U.S. Aggregate Bond Index, an index of the U.S. investment-grade fixed-rate bond market, including both government and corporate bonds, was up nearly 4%, while the 10-year Treasury yield fell about 0.5%. We believe that it could be a good time to review fixed income allocations given recent bond market performance. We find the first 6 months of 2014 mostly in line with our 2014 market outlook. As a reminder, you can view our 2014 market outlook at our YouTube channel. For more information about Texas Legacy Wealth Management, you can contact us via phone, email, or feel free to visit our website. We also would like to remind you to follow us on Twitter and like us on Facebook. Thank you.